consistently across the space, the vast majority of the miners have said, we're not going to grow our fleet. We're not going to refresh the fleet. We're not going to focus anymore on Bitcoin mining. And, there's some OG miners that have said, hey, we're going to be a data center company and we're going to phase out Bitcoin. We've been very clear. Our efficiency of operations really separates us from everybody else. Using Bitcoin mining is absolutely an invaluable tool. I got in a little bit of hot water because I said on CNBC the name of a hyperscaler that we actually beat out for a contract in Cheyenne. And they frowned on that. But the point is, there's $1 trillion hyperscaler that was bidding for 100 megawatts, and there's a Bitcoin miner that's bidding for the same 100 megawatts, and we won. And the reason we prevailed is because we told the utility we'll start buying that power in 6 months no matter what. And a hyperscaler building a proper campus is going to be 2-3 years. So you think about the millions of dollars in lost revenue, and you can't store that power. If it's available now, they want to monetize it for the benefit of the utility, for the benefit of the community. So Bitcoin mining is absolutely mission critical to secure those power contracts, to monetize those megawatts, and then to build a proper data center behind that. Then you can re-energize the data center and repurpose the Bitcoin mining.
CleanSpark is coming off of its hottest year yet. It reported $766 million in revenue for the fiscal year 2025. And so for today's show, we have none other than CleanSpark CEO Matthew Schultz on to talk about the fiscal year 2025 results, as well as CleanSpark's AI expansion and where we might expect to see an AI and HPC site in addition to the one they are building in Austin County, Texas. You're listening to the Mining Pod, brought to you by CleanSpark, and we will be right back.
Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today. Matthew Schultz, welcome to the Mining Pod, sir. How you doing?
I'm doing great, Colin. Thanks for having me.
Yeah, absolutely. Congratulations on the quarter. Super strong. I actually have to say my dad was listening to the earnings call with me, and he was like, did I just say 760 million revenue? I was like, yeah, Dad, these Bitcoin miners aren't messing around anymore. So to set the stage, I'm going to get the earnings presentation up here so we can kind of go through some of that as you give some high-level thoughts. But can you kind of just walk us through some high-level takeaways from y'all's fiscal year?
I think production speaks for itself. The fact that we generated $766 million in revenue at a 55% plus gross margin speaks really highly about the team of people we have. The guys just, they prioritize uptime and efficiency, and the teams are incredible. When you think about the fact that we're operating 260,000 computers, they break a lot. And, our repair teams, I got guys in small towns that, they've learned and been trained to do repairs on hash boards all the way down to the semiconductors. And they prioritize making sure that our performance is always the best. And I made a comment on the call. This summer, we had a leadership meeting in Greensboro, Georgia, and all the site managers and all the guys that are in an upper management level with our operations team came. And, we had a special forces guy come and talk about strategy and the way that, special forces guys think about working as a team. And our guys coined the phrase, be the standard. And, it really has reverberated throughout our team. So whether you're talking about the accounting team and the tax team and the legal team and the PR team, everybody has really elevated their game. And I think that those numbers are really reflective of that. And obviously what we realized is, having 34 locations now in, 5 states, I guess. We have this portfolio of land and power. I think it would be foolish of us to just assume that the only use case for all of those assets is Bitcoin mining, because the economics are changing. The halving event is really challenging for a lot of the peers in the space, and with global hash rate at 1100 exahash, difficulty continues to be a challenge, and with energy prices under pressure, you have to kind of think about the fact that you have this incredible portfolio and there's tremendous demand, and the internal rates of return on an investment in an AI HPC type pivot, or not pivot, but expansion, are a little bit different. So, we're really excited for what the future looks like, but the past is just, discipline. And I think the last point I want to make, Colin, is that, we hit 50 exahash in the middle of, or just before the heat wave started in the summer and things got crazy. And so our hash rate pulled back a little bit just as we worked with the grids to balance the load, but that's to be expected. And we're now back up. The weather's cooled off. We're operating at max capacity. We have 6 exahash of new machines that are landed, bought and paid for. We've got immersion cooling infrastructure to put them in. They're being deployed in Tennessee, Wyoming, Mississippi as we speak. So we'll add 6 exahash more. These are 13.5 joule per terahash machines. So it's going to increase our fleet efficiency. So it's just, I think being disciplined and being really truthful as we're self-reflective about, what's the highest and best use of all of the assets that we have and the people. And I think that those numbers kind of reflect that. We made some tough decisions. But man, the team just rallied around it, and we've made something special.
Speaking of those tough decisions, not to put a word in your mouth, I'm assuming that you might be referring to you retaking the helm as CEO and Zach Bradford stepping down earlier this year. Can you speak to that leadership transition and how it's been for you stepping back into that CEO realm, and maybe contextualize what that means for this current growth trajectory of the company that we're seeing as you move into AI workloads?
Certainly that's been a challenge. Zach is my friend as well. So, the separation there was not without its hurdles. It was a mutually beneficial agreement, arrangement, excuse me. Zach texted me when I was back in Miami. We participated in the Cantor conference. And then we also, during that conference, or just prior to the start of the conference, we raised a $1.15 billion bond offering, and Zach reached out and, texted me, said, congrats on the $1 billion deal. But the coolest part about that is he sent pictures of his brand new baby, and Zach's a, 40-year-old first time dad. So, it works out well for everybody. We get a new perspective on the way that we run the company. We've realigned our executive roles. We've promoted some guys, and what we've really done is empowered the people that we have to be the best they can be, rather than, try and separate and isolate the different teams to manage it that way. So it's become a more collaborative environment, which isn't a knock on Zach's leadership style by any means. It's just, I see things differently. I recognize that I'm surrounded with people that are infinitely wiser than I in a number of different subjects. And rather than try and have them teach me their skill set and then me make an executive decision about what's going to change, I've really kind of tried to break down the silos, and we built a team of people that are really just high performing. Everybody that works for us is a shareholder, so our interests are aligned, and it's been kind of an energy shift. And I think the addition of guys like Jeff, promoting Harry, adding Gary to the president title to Gary's role, it's really empowered the people to continue to thrive. And I'll tell you what, the energy in our organization is like I've never seen before.
So speaking of that energy, a lot of excitement around this Austin County center or site that y'all are developing.
You touched on it a little bit in the fiscal year 2025 recap or earnings call, but I just kind of have to ask here for our listeners for anything that you can give us in terms of updates on this site or what y'all are thinking in terms of development timeline.
Yeah, so here's why that was a jewel. If you went to Texas right now and tried to secure land and power at any scale, as a decentralized network, ERCOT has to go through all that approval process, and that can be months or years, generally years. And so they require a large load study. You have to get, the approval for the interconnect if you're going to do any kind of behind the meter generation. So the paperwork part is a challenge, but then the next big lift is there's so much demand for infrastructure, for substations, for generation that if you're a billion-dollar company, multi-billion-dollar company, you want to order, the long lead items on a substation, you'll get them when you get them because you're competing against hyperscalers. You're not going to get any preferential treatment. So the cool thing about that, and the guys that we partnered with on that acquisition, and I say partner because they wanted stock in CleanSpark as part of the pay because they want to be part of the team. They're the largest or one of the largest developers of substations in the ERCOT network. All the large load studies have been completed. The site sits on kind of a meet me type fiber backbone where you've got good access north-south and east-west. It's just outside of Houston. All the long lead time items on substation construction were ordered months ago, and we just stepped in place. So to greenfield develop that site, you'd be lucky to be energized by 2030. And we've got an energization schedule that the first 207 megawatts go online the beginning of 27. So it was really a fantastic deal. But more importantly, and I was teasing one of the analysts on their questions. They asked specifically about the price we paid for it. And I said, yeah, I know how much we paid, but I'm not going to tell you because we don't want to drive up the prices for the other stuff we're buying in the area. And we've found some pockets that are really kind of unique opportunities for us. And so we're going to expand on that. And the partnership that we've created with the group that we acquired this site is meaningful. They're helping us with the applications to ERCOT, with the large load studies, with some of the infrastructure. They're going to be our development partners. So it's really a jewel. And I think long answer, and I'm sorry about that, Colin, but what makes this so special is flat out just speed to market. Great energy cost, great fiber access, great property of 271 contiguous acres, but also speed to market. So, as you look at, we spent a day, my whole leadership team went to San Jose, and we spent the day with the senior leadership at NVIDIA. And they presented us their giga campus. So if you're going to build a gigawatt site to hold a GB300 cluster, they have the whole thing laid out. And we're talking hundreds of acres and, access to land and power and water and all the mission critical components of that. And Sealy, Texas, this Austin County piece kind of checked all the boxes on a smaller scale. But the cool thing is there's room for expansion and there's plenty of gas on site. So we can do behind the meter generation and ramp up that 285 megawatts. We believe we can ramp up that 285 megawatts to a much more significant number.
So kind of just picking apart some of these pieces here, the partnership with the company that's helping you develop this, that kind of gets y'all a little further ahead in the queue for raw materials and things like that. You don't have to wait. You can jump the line for someone who's already had that in play. I'm curious how Submer also fits into the development of these sites. CleanSpark has a partnership with this cooling solutions company called Submer, and I just was curious how this partnership factors into this Austin site and potentially other sites, and what kind of synergies you can get from a partnership like this.
Yeah, that's a great question, and I'll tell you that I think we had the belief that if you built a data center, and I'm using the term loosely, that if you built a data center that was, had appropriate cooling and had all the required infrastructure for a hyperscaler, that they would be beating down your door. And what we learned, especially bringing Jeff Thomas over, is that it's not, hey, build a data center and then we'll configure our cluster to work in that data center. A hyperscaler isn't interested in trying to fit a square peg in a round hole. And so these sites, like what I just mentioned about the Giga campus from NVIDIA, you're talking a gigawatt of power and hundreds of acres of footprint, and the fiber runs are down to the foot and in some cases down to the inch. So when they lay it out, everything has to be parallel for the fiber runs. You don't want any change in angle because it increases latency. It's insane the amount of engineering that goes into this. I mean, they had a GB300 taken apart on the wall, and the fiber that's inside some of these machines and just the interconnection to the network is mind-boggling. So Submer is very unique in the fact that, we know them. We've used their infrastructure before in Bitcoin mining. Submer has active Bitcoin mining all around the world, and they've worked with Jeff, our new guy, on AI deployments in the Middle East. And so there's some familiarity there. And what sets Submer apart is the fact that the design of that, so you build a data center, and then what's the really complex part is MEP. So it's mechanical, electrical, and plumbing. And depending on where you go for your cluster, if it's going to be AMD or NVIDIA, they have what they call a reference architecture design. So this is the alignment, this is the size, this is a volume, this is a space, this is the cooling. They have all of that reference architecture incorporated. So now what you're faced with is, if you're building in Texas, you've got to hire trades, you've got plumbers, you've got electricians, you've got general contractors, you've got all these guys that are now trying to build specific to a reference architecture to accommodate an end user. What Submer's solution is, and Integra, there are some other companies that we've worked with that do the same thing. They take that construction out in the field in West Texas and they put it modular in a modular unit, and they build that in a factory in a controlled, clean environment, and they do it repeatable and at scale. So rather than do this very detailed reference architecture design and deployment in the field, we do it in the factory. So we tip up a building with all of the water, all of the power, all of the infrastructure, all of that ready. And then they slot in the modular units by Submer or somebody else. They can do it much faster. They can do it much more efficiently and effectively on, according to those specific architecture plans. And they can do it cheaper because it's an assembly line process in a factory. So it takes a lot of the guesswork out. So it's a unique opportunity because speed to market is better. And, the 10 million per megawatt that we're seeing to build out infrastructure for a proper GPU cluster gets reduced significantly. So it just, becomes an efficiency game. And that's really what has set us apart since we started mining Bitcoin.
So am I understanding it correctly? These are containerized solutions. So when you say modular, are we talking about they're going to be a little more flexible, easier to move? It's not just like one massive cathedral. What design spec are we looking at?
Yeah. So you would have the building that looks like a massive cathedral, but then the orientation of the modules. And I wouldn't say, it's not like repurposed C cans or anything like that. It's a proper purpose-built modular unit, but it's manufactured to slot in the fiber. Everything's already in there. So you bring these in parallel all the way down the building, depending on scale, and then you connect all that on site. So
got it.
It's kind of crazy. We're working with a number of hyperscalers. And I won't use any names, but one of them said, we're excited about Submer, but here's our challenge. Our current profile is our rack density is 17.5 to 30 kilowatts per rack. And Submer's rack density is 200. So their rack density is more than what some of the hyperscalers need. So, Submer's flexible. They can modify those designs, but they're specifically designing to future-proof some of these deployments because, as we know, and NVIDIA is not shy about talking about it. The next level of the next round of chip design is going to increase rack density even farther than what we've seen. So you have to be prepared to have that flexibility. So I think we're at an interesting kind of tipping point in data center development. We talked about it on the call yesterday. You can Google, Meta has built data centers in tents just because they can't tip them up fast enough. So, the idea of building a purpose-built module in a factory that gets slotted into a standard architecture, gray shell, it really creates predictability and consistency for the operator of the site.
What's amazing about this to me is every conversation I have about this, about an AI, standing up an AI data center, any sort of HPC compute, sourcing raw materials, everything, it still seems everyone's moving so fast that everyone is just getting compute online as quickly as possible. They're getting energy for wherever they can get it. They're buying old jet engines to make sure that they can have backup power. We're just hearing all of these crazy stories. And what I keep coming away with, you're talking about Meta putting data center or GPUs in tents. There's almost a Wild West element to it where there are no standards. There are standards, I'm sure, but there's so much wiggle room with how you can get one of these off the ground, and there's not necessarily a right or wrong way to do it. And that kind of leads me into my next question, which I'll kind of do as a two-parter as we look at some of the other sites that CleanSpark might evaluate for AI and HPC loads. What's CleanSpark's at the company's philosophy with regards to the best approach to standing up a data center like this? Obviously, the Austin County will be greenfielded. What's CleanSpark's opinion on retrofits, things like that? Would y'all consider a mix? Is it kind of just case-by-case situation?
You read a lot about Bitcoin miners retrofitting their facilities for AI, and that's really kind of a misnomer. The challenge is that if you're going to do this at scale, you've got the giga campuses that are large scale training models. You've got the mega campuses that's kind of a hybrid between inference and training. And then you've got the last mile that's all low latency inference stuff. And so to convert a factory to Bitcoin to high performance compute, if you're going to host your own cloud and you're going to deploy GPUs yourself or GPU as a service model that isn't specific to a large offtake client with that standardized reference architecture, you can build it any way you want. You can convert a factory and plug in GPUs and design your own cooling infrastructure, and you can lease out cloud compute. That's a great business model. We're looking for the certainty on the cash flows and the predictable revenue. And when you partner with a hyperscaler, what happens in a lot of these, you're talking triple net leases where there isn't rate sensitivity on electrical rates. So where that's the largest input on Bitcoin mining and there's a tremendous amount of rate sensitivity, it's much less so in running a data center. So what we look at, and as far as conversion, Sandersville, 250 megawatts live, that could provide about 200 megawatts of critical IT support, depending on PUE. But the power's already there. The infrastructure's there. The substation's built. Transformers are on site. That short circuits that process by a couple of years. But you can't take the immersion cooling facilities and the air cooled facilities that we have at Sandersville and repurpose those to a proper data center for a hyperscaler. So what we did is we bought hundreds of acres adjacent to, like right next to the property line. So what we'll do is we'll build a spec for who our lease tenant becomes, and we'll continue to mine Bitcoin through that entire construction process. And when the facility is ready for service, then we de-energize Bitcoin mining and we energize the data center, and we pick up the Bitcoin mining infrastructure and we repurpose it somewhere else because we can deploy that in a fraction of the time it takes to build a data center. So it becomes kind of a tool to plow the road, if you will. So, Sandersville makes sense because the power's there. Washington County, Georgia, I mean, this is an incredible little town. We were really fortunate that we had built an 86 megawatt substation in this town that had only a 7 megawatt total capacity. And when the hurricane hit, it took the power out. The older infrastructure didn't survive. So we were able to redirect our power to de-energize our mining fleet and to make sure the lights came back on in the hospitals and schools and all that mission critical stuff. So we have 100 megawatts of capacity there that's already live. We have 100 megawatts surrounding the Atlanta airport that's already live. Some of these will be a perfect use case to convert fully to AI and HPC. Some of them, it makes sense to have a blended approach because some of these utilities are looking for a component of the loads they serve to be interruptible. So in the event of, a severe weather event or something else, they can call some of those loads back, which is an incredible value that Bitcoin mining provides. So, I think the low hanging fruit, Sandersville, Washington, Georgia, Metro Atlanta, there are a couple of really intriguing sites we have in Tennessee and also a couple of the ones in Mississippi. So I think we've done a pretty extensive portfolio analysis. Jeff and his team have done so. And, we haven't talked about it publicly yet, but we have a tremendous amount of assets that give us an opportunity to re-energize Bitcoin mining, or reimagine it as AI HPC. But then the cool thing is, there are certain states here in the West that they're building new generation. And so they have the opportunity to sell power on an interruptible level. So they have what they call blockchain specific tariffs. So if you sign a power purchase agreement and it's specific to blockchain, you get a much more favorable price per kilowatt hour. And the reason that you get that is because it's an interruptible load and it allows them to, demand some of that power back if they need to serve other loads. So we can take infrastructure that we already own, that we've been mining Bitcoin, we can use it to secure those contracts. As the generation gets more stable, we can then pivot those loads to AI and HPC and replace the mining fleet and the mining infrastructure somewhere else.
So it sounds like no sites are off the table for evaluation. And I just heard, if I heard you correctly, you seem to mention that there might be a little bit of potential for some mullet mining going on at some of these sites, have some ASIC load available that you can curtail freely when the grid needs it. And then maybe if there's a downtime on the GPUs, reallocate it towards that, but then have the majority AI and HPC. Is that generally how is that something that will actually happen, do you think? I've heard this thrown around a lot, but CleanSpark is the first miner that I've actually heard say that that's something that you will actively try to do with your operations.
It'll absolutely happen. No question about it. And I think the reason that a lot of my peers haven't talked about it is because I think consistently across the space, the vast majority of the miners have said, we're not going to grow our fleet. We're not going to refresh the fleet. We're not going to focus anymore on Bitcoin mining. And, there's some OG miners that have said, hey, we're going to be a data center company and we're going to phase out Bitcoin. And so I think, we've been very clear. Our efficiency of operations really separates us from everybody else. We watch half a dozen key metrics, fleet efficiency and uptime and energy cost and cost to mine a Bitcoin and they're, the size of the HODL that we have. And we measure all these metrics and we look at how can we continue to have an advantage in the space or what are our differentiators? And so using Bitcoin mining is absolutely an invaluable tool. I got in a little bit of hot water because I said on CNBC the name of a hyperscaler that we actually beat out for a contract in Cheyenne. And they frowned on that. But the point is, there's $1 trillion hyperscaler that was bidding for 100 megawatts, and there's a Bitcoin miner that's bidding for the same 100 megawatts, and we won. And the reason we prevailed is because we told the utility we'll start buying that power in 6 months, no matter what. And a hyperscaler building a proper campus is going to be 2-3 years. So you think about the millions of dollars in lost revenue, and you can't store that power. if it's available now, they want to monetize it for the benefit of the utility, for the benefit of the community. So Bitcoin mining is absolutely mission critical in plowing the road to secure those power contracts, to monetize those megawatts, and then to build a proper data center behind that. Then you can re-energize the data center and repurpose the Bitcoin mining.
Yeah, I keep coming back to these conversations in my day-to-day life with my dad or my like father-in-law, just talking about, economy and stuff. And we're talking about the AI boom, and I keep mentioning how all these public Bitcoin miners are like first in line for some of these contracts because they're the only people who've been bidding up power over the last few years. They're the only people buying up blocks of power, 100 megawatt chunks. And it's pretty incredible to see where we are in this moment in time. And I just do want to highlight what you mentioned there about CleanSpark not totally throwing out the baby with the bathwater with the Bitcoin mining thing. As far as I know, of all of the Bitcoin miners who are actively looking into breaking into AI and HPC business lines, CleanSpark's the only one who's actually recently refreshed their ASIC fleet or bought new machines. And so I guess I would just kind of just put a cap on this before we move on to some of my final questions. What exactly do you expect for the future of CleanSpark's Bitcoin mining operations? Should we expect them, like you said, to maybe just be intermixed with the HPC operations? Should we expect maybe a place like Tennessee, where super favorable power rates for the majority of operations to be concentrated in like single geography? What's kind of the thought going forward for how you marry these two business lines?
Yeah, so it's going to be a case by case basis, but I think Colin, it's important to note crypto Twitter is a brutal place to be as an executive of a public company. That some of the things that get posted are crazy. But when we started mining Bitcoin, as we shifted away from a distributed energy resource management company in 2020. The consensus was CleanSpark's too late. You missed it. There's no chance. All the scaled miners are already here. So, we went from you missed it, you're too late, to being the biggest miner in American hash rate that's there. Guys like Penny Ether that are as critical and analytical as you can get on crypto Twitter. Following our earnings, he's even talking about the fact that we have an efficiently scaled operation, and our operational efficiency is better than most people. We can make money mining Bitcoin. And I think you look at a lot of the fleets or a lot of the companies that shifted to AI early. I can't say this for certain, but I think you'd have to contemplate the fact that they had a 30 joule per terahash fleet and didn't want to spend a couple $100 million in a fleet refresh. So it was looking for better ways to monetize megawatts. And I think, our business will continue to prioritize efficiency. That's part of our DNA from the microgrid days. But we have opportunities to continue to mine Bitcoin very profitably in Wyoming and in Tennessee and, in other jurisdictions. You can blend it in Texas. There are times that if you have natural gas behind the meter, there are times that power goes below zero. And so, Bitcoin mining is such a flexible load. I think if you were asking me what Bitcoin mining looks like post the next epoch or even further, I think you're going to have really distributed Bitcoin mining that you may have 20, 30, 40 megawatts. You're not going to have the gigawatt site or the 500 megawatt site. You're going to see pods that are co-located at substations or co-located at generation, and the utility provides power when there's surplus power, and the settlement is done, from the mining pool as it's generated. So it's real-time settlement to pay for the utility or to pay the utility, and they work with a highly efficient miner to provide that management and services and operate that. So I think you're going to see an interesting hybrid approach to Bitcoin mining, but it's certainly not going to go away. And there are so many billions of dollars in Bitcoin held by U.S. investors, strategy and other corporate treasuries, that if we were to kind of fold up and allow Bitcoin mining to go to Russia, to go to China, to go to Africa, what's the certainty that even guarantees domestic U.S. owners access to block space? And so then it becomes an entirely different conversation. So I think you're talking national security risk. So, we trademarked America's Bitcoin miner 5 years ago. And that's not just a marketing thing. We feel like there's a real partnership in securing block space domestically as a national security issue. So I think Bitcoin's always going to be a really valuable part of who CleanSpark is.
Yeah, and to me, it would make sense, zooming in on what you said there, next halving epoch. I expect the U.S. maybe to not have as much hash rate share as it does currently, but for what mining will still be going on in pockets, smaller megawatt sites on the fringes, of the energy cost curve. But I don't necessarily expect it to go away entirely. And I think it's kind of more exciting that way. There's something about walking into, a Rockdale-sized facility, and it feels weird. To me at least. And then you go into a smaller modular container, and to me it's like, to me this is more distributed. This is what Bitcoin mining to me feels like it should be. That's a little more philosophical. I would love to also pluck the thread on block space as a national security risk, but that'll have to be for another time, because I always love working out those game theoretic scenarios, right, in terms of what will exactly happen if one entity captures too much hash rate and what they can do to blacklist addresses. But we'll kind of sidebar that and go back to just a few more things on the AI before we close out. You mentioned this $1.15 billion convertible note that CleanSpark recently closed on. Can you kind of just give us some color on this, and also CleanSpark's capital strategy for fundraising for these AI builds?
Yeah, so something that's a real source of pride for our team is that Bitcoin miners have, right or wrong, kind of used ATMs and become a dilution machine. And so to have Bitcoin mining equity in your portfolio is a risk akin to holding fiat currency in the bank, that they're going to print a lot more of it. So you just hope that it's worth something when you're ready to use it. And so we have not used a single share of equity this fiscal year. It's a point of pride for us. What we did instead is we developed a Bitcoin-backed credit facility where we have now $400 million in capacity at low single-digit interest. We're sitting on well over 13,000 Bitcoin that we mined at significant margins. I mean, we were mining it profitably when it was $17,000. So you think about selling that Bitcoin, the tax impact on that would be huge. So by using it as collateral for responsible debt, it enabled us to continue to grow our fleet and operate our company without the perpetual dilution. We didn't get any credit for that. I mean, there's still a lot of vitriol in the space, but we didn't get any credit for that from retail. From an institutional perspective, I mean, we're 70+% institutionally held. And so what we did is we took a kind of a fundamental analysis. Gary and his team sat down with me and we talked about what's the best case going forward. If we put up another $1 billion ATM, the lack of certainty in the market of the overhang of what that looks like, people are inherently skeptical. Are you going to be responsible the way you use the ATM? What if it's not specific for a project, then what it is just a piggy bank to dilute everybody. So we sat down and Gary said, listen, Matt, our prior bonds are trading at a premium. The bond holders have asked us to come back to market. The market is very frothy, but it's solid. And I think, timing is critical. So we spent some time, we did a wall cross. Cantor led the efforts in partnership with BTIG, and a number of other banks were co-managers, H.C. Wainwright and others. And they did an analysis and they felt like we could do $1 billion convert. They felt like the demand was there for a 0% instrument, and that we could get some favorable terms. And so we confidentially marketed it, and we flew in. Gary and I left 4 a.m. to head to Miami, landed at 1, ended up in a hotel room, and we did wall cross meetings Sunday afternoon starting at 3 every 15 minutes with these funds from all around the world. It was terrible. They gave us so much crap. It was myself and Gary and Harry Sudak and Ben Briggs, and we're all sitting on a couch in a hotel in Miami Beach. It was totally a casting couch, but it was awkward. You know, we have I'm gonna be honest with you. I'm gonna tell you how sausage was made here. We took the waste basket in the room. We flipped it upside down and put a laptop on top of it so you could get the proper perspective. We all sit there on the couch. We do 15-minute meetings for literally 48. I don't know how many. A lot of institutions. And at the end of the day, it came time to price it, and there was demand to oversize over $1 billion, 0% interest, 6.25%, converts up 27.5%. So the only discussion for us is, how much do you want? Because there was well over $3 billion in demand. The difference is you upsize that much. Number one, you get a little more leverage on your balance sheet than you're looking for. But number two, the mix of outright investors versus hedge funds changes significantly. And when you have a higher percentage of hedge funds, the delta hedge or the trade associated with those guys going long the bonds, they then go short the equity, which can have a damaging impact on the stock. So what we wanted to do is maximize the value, and we priced it at kind of the wide end of the range. But some of the biggest banks in the world that are outright investors wrote 9-figure checks to be part of that. And had we said, no, I'm not really comfortable with 27.5% premium, I want 30, we would have lost a ton of that interest, and it would have been more concentrated in hedge funds, which would have had a different impact on the stock. Really way too long of an explanation. But what the point is, we took a $1.15 billion offering. We bought back $460 million worth of our stock, effectively reducing our issued and outstanding by 10.9%. We bought the Sealy, Texas site on the line of credit that was Bitcoin backed. So we were paying low single digit, but we were paying interest on that. So we used the proceeds to pay off all of our Bitcoin backed credit facilities. We have an extremely clean balance sheet. And so we made the decision that this gives us dry powder to go hunt more land and power. And we're really, really good at that. And it gives us the flexibility to do that without having to come back to the market and say, hey, we're going to dilute X amount for, a number of different undefined projects. We really feel like in the future, utilization of equity is going to be project or purpose built, so to speak. If we stand up Sealy and we decide we're going to own, a number of megawatts of GPUs of a cluster of GPUs, we'll go to the market and say, hey, maybe it makes sense to raise a couple $100 million on equity because we're going to own these and this is what the ROI looks like. I can't say that now. It's not in our plans. We've not discussed an equity offering. But what we want, and what Gary hammered home on the call yesterday, and we talk about all the time, is that we have optionality, and that bond really enabled us to have optionality. Last thing I'm going to say, in the history of the convert market, there have been 3 transactions greater than $1 billion, not marketed overnight, confidentially marketed just through Wallcross, 0% interest. There have been 3. One was Uber, one was Alibaba, and one was CleanSpark. So it's pretty rarefied air, considering that, 2 years ago, we were getting letters from the administration saying that, we're trying to shut you down. And here's a CFIUS order to shut down Cheyenne because of the evil empire in Southeast Asia supplies you computers. I mean, it's just the ridiculous nature of where our company or our country was a few years ago, where we were all being debanked, to now have that kind of demand and that kind of opportunity, I think speaks volumes about the work that we've done at CleanSpark and many of our peers to kind of explain and educate to the regulators and the policymakers just how valuable Bitcoin mining is.
I mean, it's been an incredibly long road, and I know CleanSpark has paid its dues on it. And, shout out to a lot of the team members like Harry Sudak. He is one of the most eloquent people to talk about why Bitcoin and Bitcoin mining matters. And so I can only imagine the kind of diatribes and, speeches we'll get from him on AI's transformative impact down the road as he continues to work on that with y'all. So, Matt, this was great. And never apologize for long answers, man. That was great inside baseball. I love hearing about the casting couch. The PG casting couch as we find a way to sell the convert. But for my last question, because we're running up on time here, I don't want to take up too much of your time. We're recording this day before Thanksgiving. So just kind of to wrap up, taking a step back at all of this, Core Scientific shot across the bow, first Bitcoin miner to announce an expansion into AI business line, kind of domino effect. You had all of these other companies start announcing different approaches. You have Hive and Iron trying to do Neo Cloud. You have most other companies going for the PowerShell model. Just 2025 has been a barrage of headlines about this company's getting into AI, this company's getting into AI. And it reminds me a lot of, honestly, the equities boom in Bitcoin mining, in the sense of, I think that investors and analysts, at least on the retail side, maybe are really just starting to get savvy on the right questions to ask, that not all these companies are created the same. They don't have the same debt structures. They don't have the same, operational acumen. They're not executing the same way. And we're starting to see differentiations in how people are starting to approach valuing these Bitcoin miners who are expanding into AI and HPC. To kind of leave our listeners with that, what are some of those overlooked or underlooked aspects of these operators that you think investors need to pay attention to as they're evaluating the companies that are expanding into AI and HPC?
It's a great question. And 5 years ago, when I started mining Bitcoin, there weren't nearly as many sophisticated sell-side analysts in the space back then. And the guys that were there were drinking the Kool-Aid from the then brand names. And so we got absolutely knocked down and abused because we did not believe in the asset light strategy. You guys are ridiculous. You need to be buying miners and plugging them in anywhere you can find a plug. It doesn't make sense to own land and power. There's only one way to do this, and you're doing it wrong. And, I can't tell you how many times I was on panels where people said, there hasn't been a lot of consolidation, but the only mining facilities that have been sold are ones that should have never been built in the first place, because you shouldn't own land and power. You should own ASICs. Well, that was the status quo. And we kind of swam upstream and we had a different opinion. And that was the correct opinion. Same thing applies now. You got guys that are levering up. You got guys that are buying GPUs. You got guys that are building their own clouds. I think that until there's kind of demonstrable revenues from these operations over an extended period of time, there's going to be these arguments. And I think what we do know is that the utilization of high performance compute isn't restricted to major metropolitan areas. It isn't restricted to only one region of the country. So having access to land and power, having a distributed portfolio that can serve these last mile loads, I think is really an important measurement. Today, having a giga campus for the training is an incredible value. I think by the next halving of Bitcoin, having 100 megawatt sites for inference and having 50 megawatt sites and for low latency. I mean, you think about robotic assisted surgery. I mean, people don't understand when you talk about what's the benefit of AI. Is it just ChatGPT give me the right answer to a question on a test? If you think about the fact that every surgery of a specific type on a heart that's been recorded is now trained into a model, and a surgeon now isn't remembering the last time he did that surgery 17 years ago. Oh, I connected this differently. You have all of that in real time in a robotic assisted environment, and latency is the difference between living and dying. So you think about the value of these last mile deployments and how critical that's going to be. I think right now there's this kind of mass focus on, if you don't have a gigawatt, you're losing, and it all has to be concentrated. That wasn't true in Bitcoin mining. We did our bond a year ago, and when we were speaking with the investors in that bond, there were 2 or 3 other major Bitcoin miners, and they would share with us, we just did your competitor's bond a week ago, and they said your model is flawed because you have 30 locations and they only have 2 or 3. And so that drives your SG&A up. I'm like, okay, well, let's just pull out the financials. We can solve that really easy. And yes, we have 30 locations, but we had 300 employees. And some of our peers had 2 or 3 locations and 700 employees. And their cost to mine a Bitcoin is 60% greater than ours. So the argument that you have to have a mega facility for any of this just simply isn't true, because the loads aren't served only in one geography. So I think you look at a portfolio, Russell and Adam at Core are great friends of mine. I have a tremendous amount of respect. I think their shareholders did the right thing in voting down that transaction. But I think Core, they're for real. They have great sites. They followed our model or they actually created the model of owning land and power. I think that there's value in distributed energy portfolio. And I think that's something that doesn't get enough consideration, because we're too focused on what's the demand for training today, and not it's going to take me 27 months to build a facility. What will be the demand for training in 27 months versus the demand for inference? And could I have more efficiently deployed that shareholder capital in 4 200 megawatt sites instead of a gigawatt site that now has greater latency and less appeal for an inference model? So I think that's a pretty long-winded answer, but I really like the idea that we're serving loads where they're consumed, that to have the demand for that in Cheyenne and Denver and Nashville and Jackson and Chattanooga and Atlanta and, Houston and Austin, to be in those areas, I think it distributes your risk as well. And we've done a really good job of managing that in the Bitcoin space.
Well, I'll tell you what, as a Southern son, love to see the operations in Tennessee and Georgia and Mississippi, just saying. Matthew Schultz, thank you so much for joining, man. Really appreciate it. I know it's been a busy week. I know it's a holiday week. So thanks for hopping on the horn, and hope you and your family have a wonderful Thanksgiving.
Thanks, Colin. Happy Thanksgiving to you and yours as well.